Have you ever wondered what can increase the net asset value of a fund? Well, the net asset value of a fund can increase due to three different reasons. When the investors invest money into the fund, that is, they contribute the capital into the fund, it results in increased cash, which is an asset. Therefore, the net asset value of the fund increases. The second is when the value of the securities that the fund has invested in rises due to changes in the market prices. This increase is known as capital gains. Third is when the securities in the fund that fund has invested in pays dividend in case of equity investments or the interest in case of debt securities. The dividend and the interest received by the fund are categorized as income. A fund accountant needs to account for the fund's income while calculating the net asset value of the fund. In this lesson, we will talk about accounting for income. We will start with the dividend income. As you are probably aware, the declaration of dividend is a corporate action event through which a company distributes a part of its profit to its shareholders. These dividends can be ordinary dividends declared by the company quarterly or annually, or it can be a special one-time dividend, which is typically a large payout. A dividend is a mandatory corporate action event, which means that the investors must accept the dividend which has been paid by the company. Investors whose names appear in the company's shareholder book of records on the record date are eligible to receive the dividends on the payment date announced by the company. The company, when they announce the dividends, they will announce the record date and the payment date. If you recall the lesson on important dates in the corporate action chapter, the ex-dividend is a key date from a securities trading perspective when corporate action events are announced. Investors who buy the securities before the X date and hold them until the X date are eligible for the corporate action benefit. So if a company has announced a dividend, then investors who hold the securities on the record date or have not sold their securities prior to the X dividend date are eligible to receive the dividend. If your fund holds a security in a company that has declared dividend, then on the X dividend date, as a fund accountant, you need to set up the dividend income in the accounting system and post the accounting entries for the dividend receivable. The journal entries would be as follows. On the X dividend date, you will debit the dividend receivable account, which is an asset account, by the amount of the dividend. You will then credit the dividend income account with the same amount. So the dividend income account is an income account, and this account will be credited with the amount of dividend. On the payment date, company will make the payment and your custodian will credit your account. So you will debit the bank account, which is an asset account, by the amount of dividend and credit the dividend receivable, which is an asset account, with the amount which has been received as dividend. So the journal entries would be debit the bank account and credit the dividend receivable account. Talking about dividends, in the fund accounting interview, candidates are asked to explain the impact of dividend on the net asset value of the fund. That is, when companies in which the fund has invested declare dividends, then what is the impact on the net asset value of the fund? The answer is that there is no impact on the NAV, as the dividend is a non-NAV impacting corporate action event. The security prices may reduce on the X dividend date, as the investors buying the stock from the X dividend date will not be able to receive the dividend. However, for the fund, the amount of dividend is already set up as a dividend receivable. Therefore, the loss in value of the stock is compensated by the dividend receivable, which has already been posted as dividend receivable in the account, which is an asset account. Therefore, there is no impact on the NAV of the fund. If you are wondering what happens when the dividend is issued by a company which is outside of the base location, that is, if an international fund has invested in a company outside the base location, then how these transactions would be posted. If the dividend is posted for an international fund that has invested in a company outside the base location or outside of the base currency, then the dividend receivable and the cash received for the dividend will be posted to the local ledger of the country where the investment was made. And then this dividend will also be posted into the equivalent ledger by converting the local ledger values or the currency in the local ledger into the base currency. This will be posted in the equivalent ledger. There will be no posting in the base ledger as the security is held in a different country. I hope this has given you clarity in terms of these dividend postings when the investment is made in a country outside of the base location of the fund. In the next lesson, we will look at how interest income is accounted.